Nvidia is selling a lot of chips. Their customers increased their buying in the fourth quarter at historic levels, more than ever. And that's translating to very good results for Nvidia that should continue into the next quarter. So in the short term, the demand is more than enough to drive Nvidia results. The bigger question is what happens after that. We're already starting to hear Nvidia's largest customers talk about moderating their spend. Microsoft's going to keep their CapEx flat for the next couple of quarters. Amazon's going to keep their CapEx flat for the next 4 quarters. Those are two of Nvidia's 3 largest end customers. So the question is more what happens next? Can Nvidia maintain growth, or will their revenue start flattening? And then to your point, their guidance for gross margins for the next quarter was disappointing. They have an accelerated product introduction cycle now, which means that every time they introduce a new product, their gross margins are going to be under pressure. If they keep doing that, then that peak margin of 75% may be harder to achieve over time.
Has Jensen Huang addressed the idea of moderating demand from some of the big customers?
He doesn't believe that will ever happen. He talks about a $1 trillion upgrade cycle that's going to happen over the next few years. And we believe that he's correct. It's $1 trillion over 10 years is different than $1 trillion over 3 years. And I think that's where we're going to have to find out in the near term, is their demand beyond those large hyperscalers. So once Microsoft, Amazon, Google start moderating their spend, will spend from other customers be able to make up for that? He believes that's the case. He believes those companies will also continue to increase their buying. We think those companies have other things to worry about. Microsoft has been increasing CapEx. It's now twice the rate that it was just a couple of years ago. That's putting pressure on margins. That's reducing the return on invested capital. It's putting a lot of pressure on free cash flow. Microsoft has to manage their own shareholders, and what they're going to do is start keeping a closer eye on that level of investment until it drives a bigger acceleration in revenue.